Thank you. Hello, my name is Jeff Wilser. I am a features writer at CoinDesk. I am joined today by Odagiu and Danilo Carlucci from Binance Labs and Morningstar Ventures. We are here to talk a topic that I think all of you guys are excited about. Very savvy crowd on data and data metrics investing. And I think this crowd gets it. And so we're going to nerd out a bit. It's going to be cool. So Danilo, start by telling us a bit about your funds and what you guys focus on.
Sure. Awesome. Pleasure to be here, first of all. 1 year after X Day Paris. Nice to be in the home country of MultiversX. Beautiful place. My name is Danilo. I'm from Morningstar Ventures. We were amongst the first investors in the ecosystem several years ago, and it's great to have seen it develop. And to this day, we are very much supporting the ecosystem. We have about, I think, 7 or 8 portfolio companies just within MultiversX alone. And we support on various different facets. Of course, also cross-chain across other ecosystems as well. But good to be here, and thank you.
Alex.
Hi, everyone. It's a pleasure to be here. It's a wonderful venue and even more wonderful event. It's great to be, to actually see how Multiverse has evolved since we did the investment back in 2019. MultiversX is a portfolio company, and we're very proud of the progress they've done. As to what we do, so I'm part of Binance Labs, and Binance Labs is the investment arm of Binance. We focus on early stage investments. We also run an incubator for even earlier stage investments. Our focus is pre-seed, seed, and Series A across all sorts of ecosystems. So we're quite chain agnostic as well as sector agnostic. So investing in anything from base layer infrastructure all the way to application layer, name it DeFi, gaming, tooling, anything in between, really.
So I don't think I have to convince this crowd of why data matters, but just for context, let's talk about why data metrics, when it comes to investing, why it's especially important right now in crypto winter in the bear market. My person's thought is that in a bull market, when this number go up, you can kind of roll out of bed and find projects. Talk a bit in this particular moment in time, why data metrics are so critical for both of your approaches.
Sure. Shall I go first? Okay. Fine. So, I mean, data is a big word, right? It could mean a lot of things when we talk about startup investing. In crypto specific, I think, you have the data in terms of the traction of the project you're investing in. You have data when it comes to the token metrics of a specific project. And these two are very different concepts, right? If you look at market cycles, of course, in a bull market, data matters, but oftentimes investors take quicker decisions. When the market is tough, looking at the data in an analytical way can, of course, from an investment point, help you save money or not lose money. So ourselves, specifically at Morningstar, I would say that we've probably learned to look at some specific data that we find very interesting and that can maybe help us make the right decisions. However, as important as data is, there's a lot of human factors which we've realized are just as important as data. And that's like, what's the background of the team? Are they aware of their own data? So one question we ask regularly these days is projection on how they're going to spend the money that they raise, projections on how we're going to track the money that they raise, and also really like making sure that they are very cautious with the funds. And I think, of course, different microcycles require different ways of thinking, but data is always a connecting dot.
Alex.
Yeah, so if you contrast the way you approach investing during a bull market and a bear market, I think in a bear market, like, data offers you an edge to get more conviction and really helps you understand and underwrite an investment with more quality insights. Unfortunately, during bull markets, there's a lot of capital available out there. So as an investor, you're actually pressed for time. So you only have like I remember 2 years ago when at the top of bull market, like founders would come to me and say, hey, you have to send us a term sheet by the end of the week. And we only discussed like first call we had on Monday. So it's actually quite tough to look at data like holistically in a span of a couple of days. In a bear market, you have more time. You also have more data sources. You can actually aggregate across different data sources and create a picture that helps you understand different facets of the project. It's not necessarily that the project itself has that data, but within crypto and blockchain space, there is a lot of data, and there's a lot of stuff that you can get out of that data. So whether that's actually on-chain stuff or testnet data, or how if it's like a consumer application, how users interact and behave within that consumer space, it helps a lot. Investors get a lot more comfort and conviction approaching an investment case analytically. And there's obviously the qualitative factors as well. Like for sure, like one of the most, if not the most important investment criteria for us is the team and the background and the experience, the execution capability, and how they think about getting to whatever roadmap or end of the roadmap and the overall vision, how they're going to get there. That's very important. You cannot get that as much from data. You get that from actually talking to the team as much. So there's a balance.
Yeah, and if I may add, I think one benefit of the bear market for us investors is that founders are putting more effort in having data available. So when the market is hot and it's easy to raise money, people just put the pitch deck together in 2 weeks and raise cash. So I feel like oftentimes in bear market is when you see better teams and better products putting effort in providing the data that's actually needed to make an informed decision.
I'd love to now shift from abstract to hyper concrete. And if you'll indulge me, let's nerd out for a moment. And Alex, start with you. Tell me some of your favorite, such a nerdy question, what's your favorite data metric? But really, like your favorite data metrics. And then here's where we'll get granular. Like paint a picture of how you actually use that. Do you have a spreadsheet with like 2,000 rows? Do you have are you just crunching numbers in a database? Like, give us a sense of beyond kind of the high level, yes, important metric. What are you deciling and saying, okay, here's like 100 projects, and we decile them by this one metric, right? Or kind of paint a picture of how you use this data. But let's start with what are some of your favorite and like essential data metrics when evaluating a project or investment, and maybe what are a couple of like overlooked and underappreciated metrics?
Yeah, so I think it's important to put a disclaimer out there. So this is for projects that actually produce data, right? Perhaps they've launched for some time, or just managed to get some data off like a testnet version of their product. Regardless, like my favorite data point is just, if we only resume to one, that would be an indication of the user base. So for example, daily active users. And this is something you can actually track on chain very easily, because each wallet is unique. So then you can go and say how many unique wallets are there that interact with this smart contract or this set of smart contracts on a daily basis. So then you can look and actually even create like a cohort analysis of wallets that came in, say, at the beginning of the month. How many times did they interact over the span of this month or quarter? How many dropped off and never came back to interact with this project? And that number, that DAU or weekly active user or monthly, whatever aggregate time span you use, is very indicative of the repeat use of it and how much users love coming back to it, right? So that's something that we like tracking closely. Regards to your second question, like what's probably underlooked or perhaps like sometimes overused as well. I think in DeFi, and that's the space that I spend a lot of time, I think there's an over-focus on TVL. So TVL gives you a good indication of sort of the health of the project, how much value is locked up in it. However, the TVL alone doesn't tell you much. It just tells you there is some money there that is potentially parked. But if the business model of that particular project actually is relying on churning that capital around and how much it needs to kind of turn around and turn over, without knowing that, you won't know the health of the revenue generation, which is potentially transaction-based. I'm referring here basically to DEXs.
Yep.
Right? TVL for DEX is a good indicator, but on its own, it's not very good.
So, sorry, but so I'm curious, can you give just maybe for one data point, maybe users, as you mentioned, that's essential. How do you inject that into your analysis? Is it a litmus test? It must have a score of X, or do you, when you're considering an array of projects, are you ranking by this and then looking at top 20%? Say a little more about how you kind of create a framework that leverages that data point.
Yeah, certainly. So I think one of the great things about our job is that we can actually come up with this type of frameworks as we go along. So there's no book like, in traditional finance, how you value companies. And you go and open the page, and there's like DCF analysis, right? Or, comparable trades, or like EV multiples and so on. Like in crypto, this is just coming along. And as part
We're all
of
learning as we go, right? This is all
right.
Yeah.
We're creating that framework. So I think to answer your question, the way we're thinking is obviously like if there's multiple projects within the same space or subsector, it helps understand and inform get some insights based on comparable analysis. So yes, we look at different projects. We potentially rank them if we have decent amount of data and look which one ranks higher, lower, and not just that, but also understand why. So actually asking the question, why does this project has higher TVL but might have like lower valuation? If you can get to the bottom and get a proper answer to that, it actually tells you a lot.
Danilo.
Very interesting answer. So on my side, I think partly the sleeping patterns of the founders are pretty important. Like especially in crypto, you don't sleep very much if you're building something. So dedication is what I would call this pattern. Of course, it's not numeric; it's subjective. But on a numbers side, I feel like it very much depends on which field the actual project is acting. Like if we're talking of a of a nodes operator versus a game, versus a layer 1 or layer 2, you're talking very much different data points that matter in that case. But I think on our side, I mean, we've noticed that some of our best investments actually came from that gut feeling you have about the team. And I would still say that us as a fund, we're pretty good at picking the right people. Data is important, but it also very much depends on a lot of different factors. And I think while data is important in investments, it's much more complex because you might have a great project that has, great DAOs or MAOs or, good traction, but it's just maybe not building on the ecosystem you're interested in. Or it's competing with another portfolio company that you've invested in 3 months before. So I think it's much more complex than just data. Like, let's be honest, investments, sometimes there's also a luck factor involved, right? So I think it's a complex answer.
How do you guys sniff out the bull, the BS, both in data and more generally? I can only imagine you guys have so much coming across your desk every day, right? And we all know in this space, there's just a ton of just, whether it's outright scams or it's people with good intentions that are just like, it's vaporware, there's nothing there. What do you do to vet the data you see? To see, okay, if someone says, we have 20 billion, well, 20 billion, probably not accurate, but we have a ton of users or we have X much traffic or whatever. What do you do to vet that? And more generally, how do you separate the signal from the noise in this sea of confusion and like tough to figure out kind of what's legit and what's not?
Yes, so I'd like to point out that what Danilo mentioned about the team. Straight off the bat, we actually try to understand the quality of the team and also the trustworthiness of the team. So even if they come up with the best data, but there's something off about the team, or for example, if they were involved with some other previous projects that are not as trustworthy, or they ended up being some, some scams and so on, that's a complete no-go for us, obviously. So the trustworthiness of the team and the way we perceive them and the way we build that relationship and that trust from day one is very important. Only then we can actually put some weight and give some credit to the data that we can use for our investment decisions. Like, data alone is not sufficient. And you pointed out something in your question, is that how do you actually vet the data that it's accurate? Even in the blockchain space, you can actually fake data or, at least like manipulate in a way that looks good. You can create, fake wallets, fake accounts, and try to pump up the user metrics. You have all sorts of Sybil attacks when it comes to different, that usually happens in the airdrops, but also when you want actually to create a picture around the project that's doing better than it actually is. So the way we're looking at that is actually trying to get multiple sources of data that talk to each other. So if there's something off, and for example, they have massive user base, but the transaction volume is not there, or they have lots of transaction volume, but the opposite, like they only have like 3 users. And that's just an example, but like if you stack them one on top of the other, at some point, if the data is not legitimate or it's fake, like the whole thing collapses. So you can actually see the narrative break down very quickly because you cannot fake reality. So or organic user interaction with a protocol. That's very hard to do and actually take care of everything. So it's just a matter of digging deeper. And coming back to your question about the bear market, you have that time in the bear market to do that analysis, to have multiple conversations with the team, to do reference checks, and understand, just getting a very holistic picture about the team behind the project and the data.
Danilo, your hacks for sniffing out the bull.
Yeah, so it's interesting. So I would say we get about 2 to 5 or 2 to 4 projects a day approaching us.
And that's just mine alone.
So I can just imagine these guys probably get 10 times more, right? So my let's say challenge to founders would be, if your idea is good enough, like whoever you're trying to approach, eventually they will hear it, right? In the sense that we at Morningstar, we try not to respond to DMs, because a DM on Telegram is probably like a DM on Instagram. There's something cheeky about it, right? So essentially, if it's a good project, what we expect the team to do is to find a way to get a warm introduction. And I would say, I don't think we've ever done any investment that did not come from a warm introduction. And when I say warm introduction, it doesn't just mean, maybe it could be someone we meet at a conference. Like I met Benjamin actually at DEF CON, at an Ethereum conference, during the Algorand meetup, right? So I'm saying you can also meet someone in person, and then that can be a great way to meet an investment opportunity. So what I would say to projects is, whoever you're trying to approach, don't just go for a cold email, don't just go for a message on Telegram. Try to get someone who already has a relationship with the person you're trying to approach. Ask for a warm introduction, because as soon as there's someone in between, that person is putting their work, their trust, on behalf of you to make that introduction. And yeah, I think there is definitely, if I look at the last 2-3 years, there's been, a handful of people whom, whenever they introduce us someone, we pay attention. And we always try to surround ourselves with people that are smarter than us, that are wealthier than us. And I think that's a great way to keep growing, both as an investor, but also the same way for founders who are on stage.
You just created a mob for yourself, right? As you leave a stage, half this room is going to converge. So what are this space obviously moves very, very fast, right? 2 months is like 2 years. Trends change so fast. How do you guys keep up with, a key part of investing is having your ear to the ground, right? To your point, you get warm intros, you learn people, you meet people. But more generally, how do you stay on top of things? How do you try and suss out, okay, this is an interesting sub-trends no one's talking about? What are your like, I mean, literally, are you spending like 3 hours a day on Discord, Twitter? What kind of formats and channels do you use? How do you guys try and stay kind of abreast of what's interesting?
Yeah, so you mentioned a couple there. I spend quite a bit of time on Twitter and Discord. You can actually find some of the trends quite early on just looking at those two. People, especially like if you follow people within a very niche sector, for example in DeFi, where I spend a lot of my time, I can see things popping up, like a project that has like 500, like less than 1,000 followers. You can see it within like a couple of weeks. It goes to like a few thousand, and then
have you ever actually invested? Have you had a project like from Twitter? You're like, huh?
Yes. Yeah. We're cool. Like the moment I find something interesting about the project, I try to get in contact. And the best projects that I found are the ones that you cannot message. So like I have to do the reverse thing, actually trying to find the founders through someone that I know.
They're playing hard to get, right?
Yeah, they are, and those are, I think, some of the best ones because they're builders. And they're not just going around, hey, let me raise off the latest hype. They're actually building something, and then they're creating the hype. So yes, we did invest of those kind of intros. I mean, they're better like outreach. So yeah, it's really helpful to actually stay on top like that. Now, you obviously have more sort of traditional means by reading research, trying to understand, like come up with some narratives yourself, and trying to understand what sort of themes might come up, and then you actually monitor those very closely. But I think that ultimately it's a combination of all of those things together.
When you say research, can you get even a little more specific? Like what types of research? Are you reading white papers? What are you doing exactly to kind of like dig deep?
Ideally, like something that has a lot of technical weight in it. So people might, write some white papers about a specific, implementation of things, and most of the times they actually go and build it. So then there could be an investable opportunity there, right? Yeah, it's that kind of stuff. I'm not talking about research that is very, macro and talks about very high-level stuff. That is kind of, bedtime reading, I guess.
Danilo, how about you? How do you stay in touch?
Yeah, so two things. So one, I think you mentioned a fair point, because like actually the one metric we haven't talked about is the social metric. And I think Twitter, Discord, Telegram, whatever field you may be in, if you have traction on those social metrics, you're doing something right. And actually, we have a common investment in our portfolio called Fusionist, and I think they have one of the largest Twitter and on-chain metrics and social metrics we've ever seen. And so I think we've actually told other portfolio companies to look at what that project did in order to kind of replicate like actual, traction. Now, in terms of, how we try to stay on top of our game and try to make the right investments and the right decisions, it's very, I would say, a bit different than, how you guys do it, in the sense, first of all, you're Binance, you're the largest exchange in the world. We're a privately held fund of 25 team members under the age of 40. So we are very much, let's say, on the ground, like hyper networking, and we're actually building a lot of stuff. So on our side, we really try to work with projects from the ground up. And oftentimes, actually, our best introductions come from other team members. So it happened a lot of times where previous investment portfolios were happy with the work we've provided to them, and then they have actually introduced us to people that they know in their network. So I think the same way you have to differentiate yourself as a builder, you have to differentiate yourself as a VC. And I mean, we know our place, right? Morningstar Ventures, we're not as wealthy as Binance, so we have to kind of build our value in a different way. And so our way of how we build our value is we're very active with the people we support. And maybe the last 2 years we were a bit too aggressive with our investments, so now we're being a bit more cautious, but we're very much taking our time to support projects from A to Z.
Two-part question for you both. Without kind of spilling your secret sauce, what would you say, and this is the part in the talk everyone starts really taking notes, what would you say are some investment opportunities or themes, sectors you think not enough people are talking about? You're like, huh, this is interesting. Why is it not being talked about more? And the second part, where does the metaverse fit in all of this? Obviously, last year, metaverse. This year, less so. But I'm guessing there are some interesting opportunities for those who know where to look. So how do you guys think about underlooked investment areas? And then metaverse, where does that kind of fit into play? Danilo.
Yeah, so I think we've done investments in all sorts of facets, right? From metaverse to NFT to layer 1, layer 2 to gaming to DeFi. So I think we've tried to kind of understand each of the different spheres that exist in crypto, and I think it's very hard to actually have a full grasp of all of them because things move so fast. So I wouldn't consider ourselves specific experts in any of these, but we're good generalists in all, right? And so if I look forward, and you know, there's two fields that I'm, let's say, passionate about. One is because I believe that that's what's going to bring further adoption. The other is because I believe it's something I'm personally passionate about. The latter is education. I think that there is, when I say education, I even mean schooling. I think there is a way we can actually, you know, democratize education via the blockchain in some capacity. And we've made an investment in that direction already. On the other side, when it comes to what I do think is hot right now, it's definitely infrastructure, because we are not yet where we want to be with the ecosystem in general and blockchain. So infrastructure needs to be further capitalized in order to make things safer, faster, more reliable, and to really have, you know, actual use cases on top of the blockchain. But in terms of what I believe will be strong in the future, for sure, I think it's hard to not mention AI. I think AI is certainly going to be, you know, a very important topic. And I was just discussing with, you know, a few people, including Alex, outside before that, you know, we see like AI is out there. Eventually, a lot of the tasks and the jobs and the things that are being executed by humans now are going to be focused and executed by AIs. And somehow, we will live in a world where AIs are going to have to pay each other. And those AIs are going to have to pay each other in crypto. So it might take a longer time.
I love this use case, by the way. I think it's very cool.
It's going to take a while.
Yeah. Alex, how about you? Overlooked trends, overlooked opportunities, and then how are you thinking of metaverse investing these days?
Yeah, certainly. So there's a couple of things that I think are quite interesting to follow recently. One of them, you know, might sound mundane, but like the Bitcoin space has had some sort of a renaissance recently this year, you know, starting with ordinals, BRC20, then you have Taproot, then there's been some interesting developments in that space which we're monitoring closely and trying to understand where that is going. Historically, Bitcoin has been moving somewhat slower just because of the way the whole ecosystem came about, you know, very conservative, trying to actually work on upgrades very slowly, take security which is very important as the number one priority, and only then kind of open up to this new, you know, SegWit happened a while ago. Then we had the Taproot upgrade. Again, took some time, and I think slowly there's more developers and they're trying to build some utility around it, which I think is quite interesting because, you know, it's half of the entire market. Now, going back to more closer to stuff that is happening, for example, in DeFi, right? So I think DeFi has a lot of interesting opportunities that are just coming about as we're seeing more institutional adoption. Now, there's like the regulatory angle, which I'll leave aside for a second, but from a like tax standpoint, I think there's a need for infrastructure that is actually friendly to institutionals. Like institutions can't go and use like MetaMask or, you know, those kind of walls. They need something a bit more robust that actually, you know, ticks all the box in terms of how they see how they are operating and what sort of like even now, like if you take an example, you know, like multi-party signature, like multi-sig, right? If you try to use multi-sig like wallets right now, I'd be surprised if like like a quarter of the people will raise their hands to say that they really love the experience, like they absolutely love it, right? No one will say that. Very, very few people will. So we need to get to a spot where we can use that kind of complex infrastructure in a way that actually is human-friendly. So just to summarize, there's infrastructure tooling that substantially increase the UI and UX for users.
And Alex, last question for you real quick. Metaverse, where do you see opportunities in metaverse investing?
Yeah, so if we place Metaverse into wider context, I think overall there's been a really high interest, which hasn't actually met with the reality of delivering that. And I think a lot of capital got burned that way because kind of went into the wrong direction. Ultimately, it comes down to having a great team that is building for the right users. And if you couple those together, I think we'll see some interesting metaverse projects that will actually be useful, will have utility, and they'll be actually fun to play or be part of.
Awesome. We are out of time. That was great. Thanks, guys, so much, guys. Appreciate it. Thank you all.